The CIO Equities at Invesco Mutual Fund has joined us. Good morning, Taher. All the very best in your new avatar. Well, what about the markets?
Morning.
We've seen this wall of money come from FIIs yesterday. Now with the domestic liquidity getting abetted with foreign liquidity, are you looking at some, 10,000 round the corner?
Yeah, I think the momentum is pretty strong, and therefore another magnitude of rally of the order of 8-10% is not really very difficult in the situation of such strong liquidity. And the fact that after the very strong mandate that we saw in the elections a couple of days ago, that's something which at every level will probably provide a lot of downside support. So to that extent, the markets remain a little more constructive than what would have probably been expected out of it. But the good part is that we're seeing a decent amount of a decent amount of support in the fact that, or conviction in the fact that we have seen a good amount of global recovery as well, especially in emerging as well as developed markets synchronously, and that is something which is probably reflecting in global market indices. It's probably reflecting in prices of metal commodities and so on. So I think there is a certain amount of underlying expectation of global economic recovery also coming in, which is actually causing the overall equity market scenario in global markets as well as in India to be much more constructive.
Okay. Taher, good morning. So what would be your portfolio strategy now? Do you think the tried and tested strategy of backing private banks, discretionary consumptions, NBFC, that's going to continue working here as well?
Kind of pretty much, Anuj. We are almost aligned on similar lines. As of today, we're pretty overweight on consumer discretionary, as well as things like automobiles, media companies, and so on. We see decent amount of support in private sector banks and opportunities in the NBFC space as well. We all know that quite a lot of these NBFCs, especially the rural inclined NBFCs, were relatively affected because of more affected because of demonetization. And now, as we are on our way to remonetizing the economy over the next few months, I think some of these past problems of the NBFC sector might probably kind of recede, and that may provide opportunities in the NBFC space as well going forward. So I think at the margin, these are our preferred sectors. At the margin, we are probably also kind of a little more positive on IT than we were earlier, and that's largely borne out of valuations. So these have been some of our prime sectors that we've been supporting more recently.
Hi, good morning. The big talking point of today is the way the rupee has surged, 65.50 now to the dollar. How does this really impact some of these export-oriented companies?
So yeah, I think clearly the sensitivity as far as IT companies in particular is something which is important. It's a 1 percentage point kind of gain in the rupee leads to about a 1.5% kind of depreciation and or a decline in earnings for some of these tech companies. And so to that extent, there is a little amount of sensitivity which is coming around here. I don't know whether it is still structural or probably it is more cyclical, led by the expectations around the Fed meeting and the fact that some of the emerging market currencies have also started to look up in the other direction. So I think, and last but not the least, of course, not to forget the strong political mandate that we got here. So I think all that is probably adding up to the rupee's strength, and to that extent, in the near term, it is a bit of a headwind. We have to also see whether any part of this can probably get passed on to consumers. So but at the immediate outset, one can probably expect some bit of impact on profitability or margins of some of these export-oriented companies.
Okay. Well, Taher, how positive are you on the consumption front? Is it just a rebound after the November-December debacle? If you were to smooth out the curve for that and look from October to January, are you really seeing a secular consumption growth? Therefore, would you bet on any stocks?
So, there are sectors which are showing secular consumption growth, but not all of them. And to that extent, we have to be kind of choosy between even the consumption theme as to what we like and what we don't like. And but yeah, I mean, the thing is that we've as we also saw out of the the evidence that we saw in the last quarter result season, that urban consumer-oriented stories were relatively more resilient than the rural ones. And I think that is some part of it which can probably reverse. I think the rural demand can probably get a little more evened out and a little more stronger than what it was earlier. Even the fact that we've seen quite a lot of improvement in global soft commodity prices is something which is probably going to be positive for rural incomes in the near to medium term. And if we are all hoping for a good monsoon, and if that comes about, then there is a good amount of demand strength which can once again originate out of the rural segment. So I think some of those areas or some of those segments which are more geared towards rural or semi-urban markets might probably start finding a little more strength as we go along. But right now it is a little more sector specific and probably a little more skewed towards urban consumption stories.
Okay, Taher, but some of these pockets have now started to trade much above median valuations, and so much money is now chasing so few stocks. Everyone is bullish on these stocks now. Do you think that there's a risk of creating a bit of a bubble in the near term in some of these pockets?
Yeah, there's always a likelihood, and but we've seen again valuations being far more stretched in let's say some of the categories like staples, etc. For example, where we've not really seen as much of growth, and there is a good chance that there can be margin compression going ahead simply because of the fact that commodity prices have kind of risen pretty substantially. So that is more at risk. I think some of the other more, consumer durable oriented stories, or let's say even some of the consumer industrials, or so to say consumer industrials, have been not as expensive, at least relative to their more medium-term underlying earnings growth, and they're also kind of more larger beneficiaries of the possibility of shifts from unorganized to organized sector. And as we formalize India more and more going forward as a result of demonetization, unintended consequence of demonetization, and probably even GST, I think in many of these industries probably the growth rates could be a little more surprising compared to what we have probably been used to, and maybe that probably justifies some of their multiple premiumness.
Okay, Taher, thank you for joining us and giving us your view. That's the word coming in from